Hey everyone, welcome back to the Gold Mining Expert Trading Journal Explainer. I'm host A.
And I'm host B.
Today we're doing something a little bit different. We're stepping completely away from the theoretical side of things and diving straight into a really raw, documentary-style look at live market conditions. We are shining the spotlight on one very specific automated trading account, GoldMining Swissie, the USDCHF Recovery Series. And for those keeping track, that's account 37251515.
Right, and the whole goal for today is to unpack exactly what happens when an automated strategy meets intense, extreme market pressure. And honestly, more importantly, how it actually attempts to claw its way back.
So our guiding philosophy for this explainer is super simple. Real results, real drawdowns, zero marketing fluff.
Absolutely. And you know, that no marketing fluff approach, it is absolutely vital in the automated trading space today. I mean, it's an industry that's just packed full of charts that magically only go up and wild promises of easy, risk-free returns. But let's be real, that is simply not reality. Today, we are setting a completely transparent tone. We're examining the authentic, unfiltered life cycle of a trading system, and yes, that includes the painful downturns.
Well, let's just jump right into the raw MetaTrader 5 data. This dashboard right here gives us a fantastic, full overview of the metrics we are about to unpack.
Yeah, and what immediately jumps out at you is that central ring chart. Just notice the striking contrast between the gross profit in green and the gross loss in red. The data we're looking at is clean, it's heavy, and it tells the exact story of an account that has been through some absolute market turbulence.
Now, before we get to the crash itself, we really need to understand the scale of what we're actually looking at. The magic number you need to keep in mind here is 2,500. This is a cent account. That means the initial deposit was just a humble $25.
Right. And for our viewers who might not be totally familiar with this, you're probably wondering, why use a cent account? Why not just spin up a standard demo account? Well, a $25 deposit translates to 2,500 cents, and that creates the perfect live sandbox. It allows us to test aggressive, automated expert advisors in actual real money market conditions, but with strictly controlled financial exposure. It's brilliant.
Okay, so what exact strategy is running inside this live sandbox? It's an aggressive grid and Martingale expert advisor, and it's operating specifically on the USD-CHF currency pair. That's the US dollar versus the Swiss franc, which is commonly known as the Swissie. Now, the grid component of this basically means the system is placing buy and sell orders at regular intervals as the price moves up and down.
Exactly. And then you add in the Martingale component, which actually increases the position sizes as the market moves against the trade. The ultimate goal there is to close the entire basket of trades in profit on just a small market reversal. So it's a very high-octane approach, and it demands intense ongoing management.
And initially, that high-octane approach worked beautifully. If we look back at the consistent early growth phase starting in late 2025, specifically October through December, the EA performed exactly as it was designed to. It was running like a beautifully tuned machine, actually locking in a very respectable 16.01% return for the year.
It was smooth sailing, but as any experienced quantitative analyst will tell you, the true test of an aggressive grid system isn't how it behaves in calm waters. No, it was about to face a severe stress test.
And then came March 2026. Talk about rough waters. A really sharp, aggressive move in the Swissie pair completely caught the system off guard, and the result was a staggering 65.44% maximum drawdown. In that single month alone, performance plummeted by negative 64.26%.
Yeah, that was a violent drop, and it dragged the 2026 year-to-date performance all the way down to negative 37.65%. Overall, it brought the total lifetime return of the account down to a negative 27.67%.
And you know, this stark reality is exactly what aggressive automated trading looks like behind the scenes. When you push for continuous, small gains through grid mechanics, you are invariably taking on some pretty significant hidden risks.
Spot on. The underlying vulnerability is that you become deeply exposed to massive equity drops during strong, unidirectional market trends. And we're putting this front and center today because these severe drawdowns, they're just part of the authentic and frankly often brutal life cycle of these types of systems.
But here is the real turning point of our journal. The system obviously took a massive hit, but it didn't break.
No, it didn't, and that is crucial. Notice that 91.4% trading activity metric. The burning question here is, how exactly did the expert advisor behave while it was under such immense, literally account-threatening pressure?
Well, with over 4,200 cents in gross profit, actively battling 4,400 cents in gross loss, that incredibly high 91% activity metric proves the EA didn't just freeze up or glitch out during the crisis.
Right. It maintained active management the whole time. It kept processing the grid. It kept continuously placing and closing trades, methodically fighting its way back from a total net loss of negative 619.55 cents. It stayed completely in the fight.
Now, look at how the balance in blue is stabilizing at 1729.21, with the equity in purple closely trailing it at 1611.49. Yeah, instead of just falling into the abyss after that massive cliff drop in March, both of those lines flatline, they stabilize, and they even begin to tick upward as we move toward May 2026. This stabilization right here visually represents the current, absolutely critical rebuilding phase of the account.
So what is the endgame here? We are officially shifting the narrative from crisis mode to recovery mode.
It's all about recovering that consistency. The marathon goal for this entire sandbox experiment is to steadily push the account toward the 10,000 cent milestone, and just to remind you, translated to real money, that's a $100 balance. So it is definitely a long road from here, but the objective is crystal clear.
Pulling it all together, we're seeing the raw mechanics of profit and loss right next to the timeline of the crash and the subsequent stabilization. And honestly, this just underscores the absolute necessity of disciplined risk management. Think about it. If this weren't a tightly controlled cent account, a 65% drawdown would be psychologically devastating for a standard retail trader. This is precisely why we test, monitor, and document live EA performance the way we do.
And that brings us to the end of today's live EA Journal Explainer. We'll be updating you weekly on this exact account's recovery series as it attempts to climb its way out of this algorithmic hole. But we want to leave you with this final, somewhat provocative thought. It's one thing for a machine to mathematically process a 65% drawdown. But do you have the human psychology required to step back, manage your risk, and let the system attempt to recover without intervening purely out of fear?
Really think about that. Thanks for joining us, and we will see you in the next update.